Welcome to World Business, your go-to channel for all things financial. Today, we're embarking on a journey into the world of investing. But don't worry, we're not just going to throw a bunch of jargon at you. We're here to make investing fun, engaging, and a little bit humorous. Why? Because learning about money shouldn't feel like a trip to the dentist. So grab a cup of coffee, sit back, and let's dive into Introduction to Investing, a beginner's guide. First things first, why should you care about investing? Well, imagine a world where your money works for you instead of the other way around. Sounds dreamy, right? Investing can help you achieve financial freedom, grow your wealth, and even retire comfortably. But here's the kicker. It's not just for the rich and famous. Anyone can start investing with the right knowledge and tools, so let's get started. All right, let's break it down. Investing is essentially putting your money into assets that have the potential to grow over time. Think of it as planting seeds in a garden. You nurture them, give them time, and eventually they grow into a lush, fruitful garden. Now, there are different types of investments you can choose from. Let's explore some of the most common ones. Stocks are like tiny pieces of a company. When you buy a stock, you become a part owner of that company. If the company does well, the value of your stock goes up. If it doesn't, well, let's just say you might want to diversify. Bonds are essentially loans you give to companies or governments. They pay you interest over time and return your principal when the bond matures. Mutual funds and ETFs are collections of stocks and bonds managed by professionals. They're great for diversification. Real estate involves buying property to rent out or sell for a profit. Each type of investment has its own risk and reward profile, so it's important to understand them before diving in. Before you start throwing money into the stock market, it's crucial to have a solid foundation. First, set your financial goals. Are you saving for a house, planning for retirement, or maybe a dream vacation? Your goals will determine your investment strategy. Next, create a budget. Make sure you're living within your means and saving a portion of your income. And don't forget to build an emergency fund. Life is unpredictable, and having a financial cushion can prevent you from having to sell your investments at a loss during tough times. Now that you have your financial house in order, it's time to start investing. But remember, investing is a long-term game. Patience and discipline are key. Let's move on to some popular investment strategies. Investment strategies are like roadmaps. They guide you on how to invest your money to achieve your goals. One of the most important strategies is diversification. This means spreading your investments across different assets to minimize risk. Think of it as not putting all your eggs in one basket. Dollar cost averaging is another effective strategy. It involves investing a fixed amount of money regularly, regardless of the market's ups and downs. This way, you buy more shares when prices are low and fewer when they're high, averaging out your cost over time. Long-term investing is like planting a tree. It takes time to grow, but the results can be impressive. Short-term investing is more like gardening. You see results faster, but need to be more hands-on. Both approaches have their pros and cons, so it's important to choose the one that aligns with your goals and risk tolerance. Now, let's dive into the specifics of choosing investments. When it comes to stocks, you want to look for companies with strong fundamentals, a solid track record, and growth potential. Research is your best friend here. Look into the company's financial statements, industry trends, and market position. For bonds, consider the issuer's credit rating and the bond's yield. Higher yields usually mean higher risk. Mutual funds and ETFs are great for beginners because they offer instant diversification. Look for funds with low fees and a strong performance history. Real estate can be a lucrative investment if done right. Start by researching the local market and identifying properties with growth potential. Consider factors like location, amenities, and future development plans. And don't forget to factor in the cost of maintenance, property taxes, and insurance. Once you've made your investments, managing your portfolio is crucial. Regularly monitor your investments to ensure they're performing as expected. This doesn't mean checking your portfolio every day. Instead, set a schedule to review your investments, maybe once a quarter. Rebalancing your portfolio is also important. This means adjusting your asset allocation to stay aligned with your goals. For example, if your stocks have performed well and now make up a larger portion of your portfolio than intended, you might want to sell some and reinvest in other assets to maintain your desired balance. Knowing when to sell can be tricky. A good rule of thumb is to sell if your investment no longer aligns with your goals or if the fundamentals have changed. For example, if a company you invested in is facing serious financial trouble or has changed its business model, it might be time to reevaluate your position. But avoid panic selling during market downturns. Remember, investing is a long-term game. Now, let's talk about some common mistakes to avoid. Emotional investing is a big one. It's easy to get caught up in the excitement of a bull market or the fear of a bear market. But making decisions based on emotions can lead to poor outcomes. Stick to your strategy and stay the course. Failing to diversify is another common mistake. Putting all your money into one stock or sector can be risky. Diversification helps spread risk and can lead to more stable returns. Lastly, don't ignore fees. High fees can eat into your returns over time. Look for low-cost investment options and keep an eye on fees associated with your accounts and transactions. Finally, let's look at some tools and resources to help you on your investing journey. Online brokers like Trade, TD Ameritrade, and Robinhood offer easy-to-use platforms for buying and selling investments. Financial news sites like Bloomberg, CNBC, and MarketWatch provide up-to-date information and analysis. And investing apps like Acorns, Stash, and Betterment offer automated investing and personalized advice. These tools can provide you with the information and support you need to make informed decisions. There's a wealth of knowledge out there, so take advantage of it. The more you learn, the more confident you'll become in your investing journey. Remember, investing is a marathon, not a sprint. Take your time, do your research, and don't be afraid to ask for help. You've got this! If you enjoyed this video, give it a thumbs up, subscribe to my channel for more awesome content, and hit that bell icon so you never miss an update. And if you have any questions or topics you'd like us to cover, drop them in the comments below. Happy investing, everyone!